Okay, guys, so welcome to our live afternoon session. So I'm going to start from the D1, but I'm going to use a fresh chart and just go from there. Let me just quickly do this. All right, so pound CHF. So with pound CHF, let me just go up to the weekly here. Pound CHF on the weekly, it doesn't look too clear like what the price is trying to do. It looks definitely like we're going for a short. I don't think the shorting is done. At the moment over here, we have a weekly stop on of the high over here, which is fine. Okay. But either way, if this is a weekly stop on as it is, there should be an RTO of this move, which is what I'm expecting to either way, either an RTO or something of that sort. Now, on the D1, we have a clearer picture of what's going on. If we follow through with what demand and supply is doing. So we have a D1 demand zone here. Okay. The price kissed the zone, but it has returned to the supply flip zone over here. This is where the price has gone so far. And so if we track the supply and demand from that point, then this demand zone over here is where the price is operating from at the moment. Now, it doesn't mean that the price won't come back into this demand zone. It should do at some point. We had a small wick in here of this bullish candle into the demand zone area. So based on the demand of this area, now the charts may not show it. If I go to the monthly, you can't really tell that well. But on the monthly, what's happened is that the market's taken the low of the previous month now, which does give it room for it to give some sort of long. I'm not going to hold this long forever, but the price has taken the low of the previous month's low here. Okay. And then more importantly, if we drag this across a bit further here, you'll see that the market's also taken the low of the previous month. So we have a type 1 and a type 2 monthly stop on. Now I'll delete these lines here as a recap. Now, I'm not going to give out signals for every trade, even if the trade does do profit like CAD CHF. If you're not on the live or you don't read the analysis, you're not going to make profit. That's my new rules. Because I'm not trying to raise people to be reliant on me. Otherwise, it defeats the whole mission of this company. But now moving forward to the H4, what do we have? So on the H4, we have a weekly stop on here. Pretty clean. Now, obviously, it's happened at the end of the week. It's not a problem. I'm not offended by it. But we have a weekly stop on here. All right. And along with that, we've had market structure break of this is the highest swing high that we could have a market structure break before the price becomes too obvious that it's going low. So we have a H4 market structure break here, which is important. And what we would need now is an RTO, which is what I'm looking for. So weekly stop on. Okay, this is the key here. If we look at the lows of what the price did, the price came close to the low. We took off for a long. Price did a very good stop on to stop everyone out, and now it's going for a long. Now, even though on the weekly, this red line shows that we have a weekly stop on, my only issue with this, which I looked at it briefly I think about 2 days ago, is that there's a H4 supply zone not too far away from here, which I'm watching as to the reason why I've set the targets the way I have. Now, my targets for this trade is, let me just put this here. My targets for this trade is 1.12316. So right inside of the supply zone, just about inside. Because this movement here, even though it is a very strong bearish movement, how the price arrived to receive supply to go short is still a bit of a question. Now, I know there's a big, on the left, H4 demand flip zone over here. But still within that H4 supply flip zone, we should have seen the price go into some sort of supply zone. Now, if the price doesn't move like this, so I'm going to put this here. If the price doesn't move like this, that's not a problem because that's what's basically happened. The price has entered into this supply flip zone, but just to the left of it, the price didn't use this, so we can't use that. All right, we can only take this large demand zone area. So within that demand zone area, what I'm looking for really is the price to come back to this supply zone here. If the price decides I'm just going here and that's fine, that's good enough for me. We've already had efficient supply here because the price just about, or maybe it didn't, Yeah, the price has come back into this supply zone. So the next supply zone down, I would like to see the price wicking here, because for the moment here, there's no supply to the left. The price when it just went into flip zone and then has produced a short, and it is a strong one. Okay, but now the price has taken the low and has already done a break of market structure. I'm expecting the price to go long and give us, now even with this move here, this weekly stop on, the price took these equal highs. And the key here is the timing. You know, when you want to interpret how market manipulation is going on, timing is also a key to think about. Now, with timing, I'm going to go here to explain. This stop hunt that happened, this is a D1 stop hunt. The MSB and RTO, the movement happened. The stop hunt happened in Asia. The RTO happened at 7 o'clock in the morning. And not 7, excuse me, 6 o'clock, 5 o'clock in the morning, because this is server time. So it's 2 hours ahead. This is 7, so it's 5 our time. And then the entry happened at 6. By 7 o'clock, the price had already crashed down. All right. So really, this is not a trade that happened within its liquidity time, which is already another suspect to me that this long that we're taking would most likely take this high and then do another stop hunt to go short properly, excuse me. All right. So with this MSB and RTO in mind, all right, on the H1 is pretty simple. I'll use 2 different lines to explain what's going on. So I'll just take off this weekly line. We don't need it right now. I'll leave this over here. We can ignore this for now. So if you're looking at the price action from this point of view, I'm going to start from the H1 and go down. Let's do a little bit of marking. So this red line is our weekly stop hunt, okay? I'll use a blue line instead, actually, so that is different. All right, now that's the weekly stop hunt that we've had. Now, within that weekly stop hunt, we've also had a stop hunt of the previous day, which is this red line. So that's already a good confirmation. So this one inductive move here has taken out the previous week's low, the previous day's low, and is also, if I go to the D1, taking the previous month's low, 2 months' lows. So the low of the previous month and the low after before that too. So that it's giving us a low of, basically this low has taken out at least 4 levels of significance. So we've got the weekly low, daily low, and 2 monthly lows. One for the previous month, which is going to be the month of January, and then he's also done the month of December. Okay, so it's a very powerful low and induction move. So this is why I've decided to take the trade, because in terms of probability, it's a pretty high probability trade. Now, what's great about this is that it's already done the market structure break that you would be looking for in a trade. So here's the market structure break. Now, I've used the H1 just to get it already. I'm sure you could use the M15 and other ones to make it a little bit more sharper, but the H1 is good enough for me. All we're looking for is a return back into here. And then from this area, you can go for a long. I think I probably gave you guys the M30 view. Okay. So if I go to the M30 here, the M30 version of this is down here. Okay. Now, the reason why I'm taking the H1 and not the M30, not because the M30 is not good. I may decide to change it and like make my entry a bit more wider, but I just want to get into the trade, you know. With sometimes with trades, when you take them, like for example, we've got this H1 version here. Sometimes with trades, when you take them, they may, you know, just use the H1 and go. And I've seen it sometimes where it's taken the H1 and just taken off. All right. Now, in this case on the M30 entry is right at the bottom of the H1. This white area is the H1 demand zone. And beneath it is where the M30 starts. Now, maybe for more accuracy, you know, you could take the M30 because you could get a much better trade. Now on the M5, I'm watching to see if there's any reason. So we have a little liquidity gap at 110,933. The thing is that for me, because of the way what I'm trading and how I'm trading, it doesn't really matter to me if the price is going to go into a slight drawdown before it goes long. As long as it goes long, it's not really a problem. Now, if I was trading on a live account where depends on what, like for example, this account, the rules will be slightly different. I may be trying to get the smallest stop loss so that I can get the largest lot size. But because there's specific targets in mind that I'm trying to achieve, then it doesn't really matter too much. I've already set my targets to exactly hit what kind of targets I'm looking for. In reality, this is how simple the trade gets. But in this case, I want to use the H1, put the stop loss below, rather than use the M30. I'm sure the price may go there and you might get a sharper entry. And that's why I've left it open to you guys. For once, I want you guys to actually use your initiative to figure out where I'm going to put an entry, where do I put the stop loss? You understand? If you don't do it, then you'll never know how to take trades. So that's really the trade of the day for me. This market, this week, I'm down about, I think, 1.7% on average, which is not bad at all. That's a good risk managed week. All right, that's how it would be usually. You shouldn't be down like crazy amounts right now. If you are, then you're over jumping the gun. And in a market like this as well, this week hasn't been too great. All right, we've had a few good movements that have happened. Some have slipped just out of our hands where we were gonna catch them, and then, that's normal. All right, but anyway, scanning through the pairs of what we've got so far. So let's see. So USD CHF is still doing well. The price, as we looked at, has taken the previous year's low and is still in place over here. So this is the only line I'm going to use, and then the rest I'll just use my cursor. So what's USD CHF waiting for? Well, with USD CHF, I believe the price is waiting for an RTO of some sort. So far, what's driving the price is this weekly stop on here. And let's see where the demand is coming from. The demand is coming from here. Now, my only problem is that the lows beneath them look to be equal. I don't know if they are. So the first low is 91262, and the second low is 91261. So basically equal lows. But we've had a weekly stop on into this area. Price has taken off pretty well, and it hasn't actually given any chance for you to get in. If I go to the lower time frames, I don't really see. And this is because of the CPI news, by the way. This was the reason the price did it. Okay, so I guess on the M15, after the stop on, there was a market structure break in our RTO back in, but it was a very messy one. But if you did catch it, you could have put your stop loss somewhere beneath, I don't know. In this case, it would have been hard to choose which wick. I would have gone for this one. And then you would have had some profit there. So it's not a bad trade at all. Just a little bit of a messy, noisy opportunity. Well, messy and noisy to actually get there. Yeah. One sec, man, I'm coming. So I think looking at the price action here, and I'm going to scan through, 1 second. I'm going to scan through all of these. Looking at the price action here, it'll be interesting to see what we get. So I'm going to go to the dollar index. I'll come back to you, man, I promise. And then see where the dollar index is going, and then we can map these two things together. So let me pull the dollar index up quickly. So dollar index, let's see where the price is at. So the dollar index has finally got into this D1 demand zone, which is what I was looking for. Okay. On the H4, the market was really trying to, I guess, use this weekly stop on to do something. But if you can see here, this weekly stop on into this supply flip zone has pushed the dollar to 104 now. Okay. Now to the left, on the H4, there's nothing on the left that will let you know where the price is going to sell from. The next supply zone is all the way at 105. So right here. Okay. Now this dark blue, I feel like it doesn't really work well with the chart. So I'm just going to just use sky blue. All right. So what can we do from here? Well, on the D1, since the price is in supply and this movement here is a weekly stop on, or excuse me, a daily stop on, what we're going to have to do is work out when the price is, because we do need an RTO. If you go to the weekly here, the price has surely broken far above, where we started from, and is doing exactly what we need it to do, which is on a monthly, as I've spoken to you guys about, we have a supply flip zone over here. And then from the supply flip zone, we've then had this demand zone form here. And then from that demand zone formed over here, we have a monthly stop on south, which is exactly what we need to trigger the next wave of dollar index bullish movement. Now, in this movement here, there hasn't really been an MSB and RTO. If we isolate the price a bit further, we had this very awkward looking stop on that happened, which came from the FOMC news. And now we're going to need some sort of RTO, maybe back to this demand zone here, back to 101. All right, now I have so many blue, let me just do something here. I have so many blue zones over here that I have to delete some, because if you follow all of them on the same time frame, it's just going to look like, a mess. So I'm going to take this off now, and take this off. And so what do we need? Well, we'll check the news in a minute from what's going to happen next week. But on MSB and RTO, the easiest one in this case is that the dollar index will need to come back to about 101 one more time. If it can return to this demand zone here, it doesn't need to go down to these lows here. It's not necessary. This is secondary demand, so this is enough to make the price go short, to go long, excuse me. So something like this, if the dollar index can achieve this, it will mean USD CHF does an RTO of the weekly or yearly stop hunt. It means that things like gold will go for a long and will do a yearly stop hunt, or do an RTO, excuse me. 1 second, sorry guys. Yeah. So for me, I mean, looking at the dollar index from where it is, I'm just going to compare it now. So if we look at this, remember what we need with the dollar index. So if I go over here, I'm going to come back, and then Matt, you can go for it. I'm just going to quickly scan through every chart. So what do we need with AUD USD for us to get our entry? Now, AUD USD, for example, which we talked about, is fulfilled weekly unfulfilled efficiency and is giving us a stop hunt of the previous month's high, which was a great opportunity, of course, that I took advantage of gold, and I gave you guys other pairs, NZD USD. So we've had a very strong bearish movement. With this bearish movement, we've had break of market structure, but we haven't had an RTO. And the market is going to need one in order for us to start really going for a short. So market structure break has started from around this area. And you can tell because the way the algorithm of the market is treating this low, we have lots of spikes at this low right here, which gives you a lot of information to know that this is a valid break of market structure. Now, as of a Friday right now, the price has fallen into demand finally, into an area of demand. And this demand is important because this demand zone is what pushed the price all the way to the stop hunt point. Okay, underneath this demand zone here, we have a D1 stop hunt over here. And in terms of fulfillment of inefficient price action, I'm going to quickly just do this properly. Yeah, let's put this here. The unfulfilled efficiency that we have here, we have one low, we have two lows, and there's three, and there's number 4. So if you look at this properly, there's 4 lows that have tried to return to this demand zone and haven't. Right now, as of Friday, the price has dipped into a very strong area of demand, and this very strong area of demand has the liquidity to push the price along. So I'm expecting, for example, next week that we should all have stop hunt south, and this should push the price back to the RTO phase, which is what we need. Once the price gets somewhere within the range of this supply zone, then the main shorts that we're looking for, which will be basically the inflationary short that's going to happen because of quantitative tapering, will start to happen. But we need it for all of these pairs. So if I do this here, AUD USD is the first one. I'll take them one by one quickly. If I go to pound USD, where did pound USD go to? Now on the weekly, it looks like pound USD is run away and it's just going short at this validation point. But I'm just going to take the D1 because the key here to remember is that the weekly is correct. The weekly is correct. You know, the price is clearly, let me just put this here. The price is clearly wanting to go for a short. Now, with that in mind, pound USD has given us, I'm going to go over here to the weekly, an important weekly stop hunt. On the daily here, the price has taken the previous month's low and given us a long. Right now, the price is inside of a deep area of demand, okay? And if we trace the demand all the way back to where it's coming from here. So we have another demand zone underneath here that price is dealing with. So there's a few options. I know that pound USD is going to go short, just like other pairs are going to go short. At the moment, with pound USD, it's done a stop hunt of the previous day's low. And it's also taken out this low, which is a type 2 stop hunt. So I'm going to put this here. Now, if price stays within this demand zone, remember, if we look at the same situation again, I have to take off the period separator for you to see which one is which. But over here, there's a stop on up here. With the period separators on, it looks like we have equal highs. Okay, because the dotted line is following through with the high, but we have a D1 stop on, a major one that could cause the price to go short. There's going to need to be an RTO back over here. Okay, the closest attempt was this week when the price kind of spiked up on the pound from the stop hunt we tried to capture. That didn't really do what we wanted and stopped us up, which is fine. But what we needed was some sort of way for the price to go for a long. And I guess the market is just playing that game of trying to be hard to get. Now, into the next week, we would need something like this. When the price gets here, this will be the full RTO of this major movement. What major movement? Well, it's only a few pips, but the high of January did a stop hunt of the high of December. So that's a monthly stop hunt. And then we can start looking for shorts in this manner. Okay, so this demand zone is supply and liquidity. AUD USD has just gone into its right now. Pound USD is going into its next one. So I'm going to do this quickly as a Friday because I know that we've got a very important week ahead. Let's go to the next pair. So Euro USD is another one that's important. Okay, Euro USD took a bit of a, I would say, a much more strange journey to do what it needed to do. Okay, now the key is that on the monthly here, all right, I'm hoping that the body of the candle will close beneath this supply zone because that will help. Because already, one of the things with the euro is that the euro is already closed above this key flip zone here. All right, and it's gone to the next supply zone available, which is the 2020-2019 area over here. That's what the price is working with at the moment. All right. Now, regardless, even if it's going to go for a long or it's going to go for a short, whichever one, we still need the price to give us an RTO. So if I go to the weekly here, weekly supply is over here, just for you to see. This is where the wick of the candle went into, this area of supply. On the weekly again, the price has been going short, but there is a supply flip zone right over here, a very important one. And the demand liquidity that's derived from this supply flip zone is right over here. So somewhere around this range, Euro USD is going to have to work out what it wants to do and sooner or later stay within here so that it can go for a long. If we go to the D1 and we look at what happened, we had a major move. The D1 stop on is on top over here. I'll take off the weekly area. We don't need it. Okay. But now that we've had this, very similar to every other pair, what has the market done? Market structure break. Where has it done it? In this case, we have two major suppliers, I'll say market structure breaks. Two key ones where the wick of the candle is reacting to, which lets you know the algorithm of the market has something to do with these price ranges. So now on the downside now, if I take this, let's look at demand now. In the case of Euro USD is a little bit far out, just a slightly far outside of the area of demand. It needs, from the current price, it needs about 42 pips left to go down short, and then it can proceed for a long. And what's this long going to produce? An RTO so that we can go for another short. So we need this, and then from here, we're going to go for a short. Okay, and then the price can come down sub $1 again. All right, so every single pair so far, AUD USD, Pound USD, Euro USD are acting the same. USD CHF, I've just done that one. We know that the price has done a yearly stop on. It needs to break market structure, which is doing. And we looked at this already. We had a very, I would say, algorithmically engineered trend line, which the price has broken. It was this one here. This is the one that the price was doing. We can even take this one if you want. But either way, the price has broken it. And now what we'll need is a simple RTO for USD CHF, and then that would be a long. All right, final two. So USD JPY. All right, now USD JPY, I'm glad that my suspiciousness actually saved me, because I was in USD JPY. I took a slight bit of profit out because I'll explain quickly and then I'll go through the trade. So on the H4, we have this supply zone over here, which was of my interest. There was unfulfilled efficiency when this first happened. And the reason I took this trade, but I closed it too early out of a bit of fear, I'll be honest. because at that time the news was about to come out. We were gonna have some sort of US high impact news. I think it was CPI news or something. We had a weekly stop on. The price gave a very strong short, almost like a dead drop. No, there was no chance of you catching this. The market wicked back up, but didn't return to supply. So when it came back here, my thought was, okay, since the price is here, let's take a short. The price returned here at 8 in the evening. So basically nearing the end of the US session. Took the sell, wasn't happy with it, especially because a new day was going to come and maybe the price might stop us out. And as my suspicions were correct, the price didn't do it in the same day, but sneakily and at another time at night, stopped everyone out if you took this trade. And now the price has come to take the high of the previous month. Now, why is this important? Well, in my suspicion, the reason why I didn't want to take this trade or hold on to it is because the price is too close to a very significant high to decide that I'm going to take this sell. I didn't see how the price is going to run all this liquidity all the way back down here, which is what we need, without taking this monthly high that's been around since the beginning of the year, basically. Now that the price is here on the D1, okay, there are many zones that the price is definitely along. I gave you guys USD JPY from before. You can see that the price has returned to monthly demand finally after however long, because we had a very strong bullish run, but there was no liquidity driving it from this demand zone. So this low over here didn't return over here to this area, okay, until the price touched back down here. Now that we're in the first key monthly flip zone, which is this whole range here, I'm not going to draw it, but this whole monthly area here of demand is a flip zone. Within that area, okay, I will draw it just for a moment. So over here, let's use a different color now. Now I'm giving you guys this breakdown now because next week when I give out trades, you should all be prepared. Okay, I'm just going to drink something. This monthly flip zone here, now that on the D1, the price has taken a monthly high, it might seem insignificant for now, but if you have a monthly stop hunt of a previous month, for example, inside of a monthly demand flip zone, which is now supply, you are going to have strong enough liquidity to push the price down. So paying attention to that, okay, let's go to the H4. What we would need is probably across the next week or 2 weeks, all we need USD CHF to do now is to provide a break of market structure. Ideally, I would say H4 market structure is good enough. We could use D1 market structure if you want, but the problem is the next swing low, because the price has been pushing long, the next available swing low is all the way down here. And to be fair, by the time the price is all the way down here, it would be too late. So either a H4 or a H1 market structure break is sufficient. So for example, this last swing low before the price went long, coming into next week, if we have a very strong short on USD CHF and JPY does this, and then on the return, we have a pullback like this, then we should be expecting USD JPY to give us a short until it returns here. This will be the first angle that we go for. All right. Now, for me, I'm going to stick to looking for the H4 market structure break. Reason being is because I want to make sure that the price doesn't respect this H4 demand flip zone. Because if it gets in here and it struggles to break beneath here, then the price will continue going long, and that's not going to be good either. If we go to the H1, structurally speaking, it will be the same thing. If you look at the price action for today, how strongly the price has gone long, observe it for yourself. You'll see that the last swing low is actually the same H4 one. The last swing low before this movement happens is here. There is no swing lows to the left. And then more importantly, you can see the algorithm of the market at work. You see the algorithm of the market has made this important range here. Now this, whenever you see something like this near a previous high, this is algorithmically controlled price action. What the market is doing here is creating a false sense of a bullish trend line before fully breaking down the other way. Okay, this is what this is. This is what we would call in this case, a buy order aggregate, which means an aggregation of bullish liquidity before the price suddenly turns the other way. As you can see, the first 3 bearish candles, the first 2 have completely swallowed up the end of this trend line. Okay, so this is a key here for you guys to pay attention to when it comes to price action here. Okay, so looking at the H4 for USD JPY, this would be the schematic for that. Now, finally, the last two, and then Matt, go for it. USD JPY, USD CAD, excuse me. So USD CAD, we've already talked about. I gave you guys an entry for based on the stop and price action, which was over here. If I go over here to this H4 demand zone, which is still hanging on pretty well, let's just pull this here. If I drag it all the way across, you can see where the market is, what the market is working with and where it's working from. So right over here, the signal I gave you guys was to get in from here, stop loss beneath the low. So if you still held onto it till now, bravely, should be up by 263 pips. But of course, we don't count in pips, but in terms of percentage, you should be at like 1 to 8 risk to reward. So if you risk 1%, should be up like 8%. Now let's look at USD CAD. USD CAD is probably one of, I would say, one of the most complete price actions. And if it pulls back, it may not pull back all the way down to this area unless there's one more cheeky move it wants to do. However, in terms of what we've got going on here, let me just go to the weekly for you guys to see. On the weekly time frame, you can see how strong the price has stayed within this area. The only way I can think of that USD CAD could completely do something or do the second option of what we're looking for is if it was to decide to come to this demand zone. This is another key demand zone here. And to be honest, it's a stronger base of liquidity than where we're working with. Over here, if we go over to the weekly time frame here, looking at the weekly time frame, this demand zone is where all the liquidity was derived for the strongest move we've had for last year. The only cheeky move that USD's CAD could do is pull back down here and return to a stronger area of demand before launching for a long, which is possible, okay? I don't want you guys to say it's not possible because, or think it's not possible, I should say, just because the trade is taking off in profit. Because equally, and I want to point this out to you, I'm going to take off the period separator so you can see what I'm talking about. This candle here is a weekly stop hunt of the previous weekly high. And it done that within supply also, okay? Now, taking a bit further, if we go back and trace demand over here and supply, we have a demand flip zone here, and we also have a supply zone. The only issue here is that this supply zone and its highs did not return anywhere. It didn't return to the supply zone or the flip zone for liquidity, but yet it's gone short. So this long could be a deceptively good long until we get here. And then price may decide that from here, I actually want to pull back down one more time and then go for a short down here. All right, so I want you guys to pay attention. I'll put the period separators back on. So this is another side to the story. If the price, for example, came down here before returning, then on the way up, you'll feel efficiency and continue going long. But I just want you to pay attention to that. However, over here, which is pretty good, we had another weekly stop hunt just near the end of the year, which is what price is working with now. All right, so going to the D1 here, and you guys are going to almost immediately remember the trade I told you about, which is why I was suspicious of USD CAD. So I need another area to show you this. All right, powder blue. So if I go to powder blue, and I'm going to use this color here, let me zoom in so that you can see what I'm talking about. So when the price produced this short, we had a lot of volatility here, as you can see, lots of wicks. But the key important thing to note is that the price has produced a sell, which is a sell, excuse me, which is what we're looking for, not a sale. Well, you could say that actually, but in a different way. But the highs over here did not return into supply. So over here, we have unfulfilled efficiency. I'll mark it out, I'll write it. Over here, we have unfulfilled efficiency on the D1, which is quite a strong unfulfilled efficiency. All right, let's put D1 UF for short. So ideally, which is going along with what I was just saying about unfulfilled efficiency on higher time frames, if USD CAD is going to continue going long, which it should do, it will most likely stop here to fill efficiency before giving us another strong short. Okay, and this is why I want us to watch this area. However, if the body of the candle successfully closes above here, returns and continues, then it's good news for all of us. We can continue holding USD CAD, and that's the end of the story. But this is why I would say with USD CAD, we should watch out. Now, another thing about USD CAD is that even though the dollar index is really something that's very strongly correlated to major pairs, USD CAD does have some deviations. And the reason is because USD CAD, the Canadian dollar and the Canadian economy has one of the most important human resources as its major export, which is oil. So USD CAD is very sensitive to oil, and sometimes the correlation might not follow with Euro USD, Pound USD, and etc. So we'll also have to look at oil prices because, for example, let's say that the price has done what it needs to do with these other pairs. If we're watching oil and we're seeing the price of oil starting to drop dramatically, then that's good because the Canadian dollar will lose strength and the US dollar will go long. However, if it's the opposite, and we'll look at oil in a moment, then we may see some kind of off correlations. USD CAD might go long or short earlier or later than these other pairs. Because if you were to do a comparison and look at USD CAD versus USD JPY and the rest, they don't look the same. There's no inverse correlation really. But if I pull up oil, I'll use spot oil instead of WTI, and you guys know why by now. If I took oil right now and we looked at what the price is doing, it's starting to pull back to that trade I was talking about. But either way, the price is starting to pull back down short. And if we were to get USD CAD and put it next to it on the same time frame, this is the H4. Let's get the H4. You can see that oil USD CAD is pushing exactly along the same way. So this bullish run we have here from, and I can mark it out to prove it even further. If I take the low here, this is the 16th of February, server time at 6 o'clock. All right, so let's go to the 16th of February on the H4 here. So if you go here, 16th of February, okay. Now the time frame is, here you go. This is the candle for it. You see this bearish candle here? That's the beginning of this bearish move. So exactly the same, just opposite. So we do have to watch out when it comes to USD CAD. We can't put it in the same category as the other major pairs. There's a reason why the USD CAD is called the loonie. It's called the loonie because it is loony, but for many years I used to call it the loonie sometimes anyway. I still found it still a bit corny, but I just used to call it for other people so that they knew what I was talking about. But USD CAD has extended correlations beyond just the dollar index, and that's the point that I want to get across to you. Okay, so I've done all 6 of these pairs. NZD-USD would be the same. You guys know the price action analysis for this already, but I'll just leave it here. Monthly stop hunt is over here, and this is the last one. And then Matt, I'll leave you to take over and you can do gold because I'll leave that for you. Matt is the gold expert. So
all right. Michael. Thanks for that one. But
one
yeah, let's
second.
let's
I'm
go have
almost
a look
done.
at gold.
I'm gonna give you one more. I'm gonna give you a second. I'm gonna just finish with NZD
No
and then
worries.
you can go for it, yeah?
Mhm.
Yeah, 1 second. So last one, guys, on NZD-USD before Coach Matt goes for it, it would be this one. So we know we had unfulfilled efficiency here of demand. This is a monthly stop hunt. Market structure break happened from this point, and it took many, many months until the price found enough demand liquidity to get here. Now, the initial trade I gave you guys was this one. Then we had a second stop hunt, which I told you to get back in. And just to make sure nobody got in, the market did a third stop hunt. I told you the market does things in 3. This third movement that it had done, by the time it done this third stop hunt, the morale to go for a short had probably died for most traders, and everybody was looking for a long because it looked like it. Even for supply and demand traders, if I was to draw this here, and this is why it's a key to understand algorithmic price action, this demand zone, imagine if you're looking at the price and as soon as the market opens, it dips into here, your idea would be to keep on buying, which is not, I don't want to, it's not to shame you, but it's the truth. It would be able to, but understanding wick price action will let you know the market is in the opposite mood. So finally, we had a monthly stop hunt of December's low in January, and the demand zone responsible for the liquidity to go long is right here. And as of now, the price is really at the depths of this area. So anywhere from now, it may even take the low of last month. We should be looking for an RTO. The final one is similar to the other XUSD pairs. We need this movement. We need an RTO here. Once the price returns here, then the full short can happen. Remember, the inflation activity that's about to happen on this market, many people are not ready for. But if we go down and look at the price action, and this is my last bit over here. If we go over to this monthlies area here, the financial crash of 2008 and the recovery in 2009, the recovery lets you know how much imbalance in price was there. The price has not returned to this demand zone, and this is in the 48, so this is sub 50 cents. The price had an extreme long, but didn't fulfill demand by entering into here. So in the years to come or in the months to come, however, whatever happens, however the meltdown which is coming is going to happen, does what it does, we will end up getting to 48 at some point. Now, right now, we're at 62. Okay, we need an RTO back to about 64, 65. But I can assure you that looking at the price action, the market will fill this area. Thinking about this, when the price went long here, it went long. The US dollar lost a lot of strength because of what it had to do in terms of lowering interest rates to provide a recovery and etc. But now the market is going to come back to take this liquidity. So I would say we're going to be here. And I would say the key to causing this to happen would be a recession, which we're in already, even if people feel like they're not. The recession is here already. By the time the news has announced that we're in a recession, it's probably been going on for about 3 months or so. So the price is letting us know where we're going. And this is why these shorts that I'm talking about are highly important and why the dollar index is going to go absolutely through the roof. So be prepared anyway, guys. This was a long-winded one so that you guys are prepared for next week. I hand it over to you, Matt. I'll leave you to take over with gold and then we'll call it a session. All right, Matt, go for it. What happened to Matt? Is he there? Okay, he said his mic is not unmuting for some reason. Let me try and give you the opportunity. I don't know if it's, let me see something here. I'm not too sure why. You should be able to unmute. I didn't touch anything at all. All right. All right. If you're not muted, Matt, I'm going to make sure that you do another session and you can take over the whole analysis because I'm not too sure what happened. That's a bit strange. But let's just go through gold quickly. All right. Now, gold is the other final one that I'm discussing with you guys where it's taken a long time. But if we recap over why I took gold short, and I've been waiting for it for many months, we had a stop punt of the previous yearly high. Okay, the market is purposefully didn't take this new high. They won't be ready until to take a new high until I want you to understand something, guys. When it comes to money and assets and gold and etc., when a currency is debased or assets drop in price, let's talk about assets. When they drop in price, what's really happening is that central banks are trying to discourage you from holding onto assets and rather hold onto their currency, because fiat currency is all about trust. It's all about having confidence in the economic system. So in times where money and the system is not working, if assets are debased, for example, if gold loses a lot of value faster than the dollar, which is what's basically happening at the moment, the dollar's gaining positive. If you're holding on to dollars right now, every single week almost, you're earning more buying power. If the buying power of assets that people trust like gold and real estate is going down and people are not buying, but then the greenback, as they call it, is pushing up, then it's going to shift the confidence from assets into currency, which is a liability. So gold going short right now, the price action that I'm talking about is also a monetary warfare against the public. And people won't want to see it like that because, the government loves us and they're here for our best interests. Keep thinking that. But if we look at the last moves that we've had when it comes to price action, when during lockdown, the price of gold made a new high. Why? Because number one, money was cheap and lots of people used currency to buy assets. And that's not good for the Federal Reserve and other institutions, because by doing so, if the confidence of currency, and it's happened in many countries, it doesn't come up on the news often, or it's hidden away in history with good cover-ups. There's been many countries where their currency has failed. Okay, for example, even in, I think one time in Russia, their money failed and it started to be used. The money was so worthless that they were using the money to heat themselves. They will burn the money or use it as wallpaper. Okay, other countries, Zimbabwe has I think $100 trillion note. The country's currency was inflated so badly, it was mismanaged so badly by Mugabe and his dictatorship government that it wasn't, for you to buy a loaf of bread, you needed to be a quintillionaire. Those are kind of numbers that are strange. The only thing is that with Western countries, those things haven't really happened per se. But if you look at Argentina, for example, the inflation is doubles probably every month, possibly. Okay. So paying attention to this short that we're looking for is not going to last forever. If you look at history from 2002 until now, no matter how many times the market crashes down on gold as an asset, it will always find its way back up. 2008 was the last financial crash, but the price ended up pushing even higher. Why? Reason being is because holding on to gold is going to preserve your buying power. The key is not about how much cash you have, is how much that money can purchase or purchasing power. So right now, this short that we're about to have, and this is why being a technical analyst is so important. If you don't have these skills of understanding technical analysis, you're going to have to rely on the news, which is also delayed on purpose, because the masses are not supposed to know what the small group of elites are trying to do. But having this level of technical analysis will be able to save you and understand how important it is to gather assets and not necessarily gather currency. Doesn't mean you don't have any, but you need currency to buy assets, but assets are more important. So if we look at gold, we have a type 1 monthly stop on north. Throughout this year, the market has been working to give us a break of market structure. And more recently, the price has entered into this supply zone, which is what I was looking for. Now, there was more parameters for me to take this trade all the way down to the daily, because the first time the price started to drop down, which was over here, I didn't trust this movement because it didn't return to D1 supply, which is right over here. So this, until the price got into this specific supply zone, I wasn't going to take the trade. And then when it did, I took it. And as you can see, the price has worked out immaculately well. Now, with this major short that we've had, this is just a preview of how much supply liquidity is in the market, how much selling pressure is in the market. And this is all Federal Reserve and other central banks coordinated together. But anyway, we've had the key breaks of market structure. We can use this swing low or we can use this one. The market has broken several swing low market structures. However, it's not done. In order for us to actually get the full short, we're going to need price to return to this supply zone first. Okay. And then from this supply zone, now why is that? One of the easiest reasons is that in a market where the price is going one way for many days, there's going to be a high amount of traders who are looking to take a sell. And in order for institutions to make money from retail traders, they need to make sure they entice them in the wrong direction. Now we're coming close to an area where the price can actually achieve that, which is the low of January. Now the price seems to have spiked and taken the low of January, which is a good launching pad to go for a long. And then if we can get this long, which I'm sure news is going to help us, we need the price to just enter into this supply area. And once it does, we're all going short. Okay, we have a pool of liquidity at the bottom of this low. And from this point onwards, prices will be going short, including crypto prices. So this is the final one where this is the reason why I'm looking at the dollar index very carefully. And sooner or later, we should be looking for where we can get our entries from. Because this short, once the price, and it's clear as well, if you look at this trend line, it's becoming near perfect. Whenever you see this is what we'll call a bearish liquidity aggregate or sell liquidity aggregate. When you see these perfect trend lines coming along, that means that institutional money and the algorithm of the market is getting prepared to completely wipe out everybody that's selling, at least for this first move. So be prepared. Now, next week is going to be a very interesting week. And I think that this preparation that I'm giving you guys will be able to help you understand where to take your long. We'll take advantage of these long trades next week. Don't get me wrong. We'll take all the buys, but we need to be prepared to see what's going to happen. So to end off this specific session, let's have a look at the news quickly for next week and see what's going on. I think I'll do the next 2 weeks. Let's just make sure that we know what's happening. So let's go over here. I already have FX Street open. Let me just go over here. So I'm going to go for this week. Okay, I'm going to apply. Let's go for next week. Okay, let's see if I can actually get the whole of this month even, in fact. Let's see. Let me put this month. Actually, no, maybe if I do this month, it'll take me too far back. Let's just do it week by week. So next week, let's see what kind of news we have available. Well, the People's Bank of China doesn't really affect us. I don't know why it's taking me to subscriptions. I don't want to subscribe to anything right now. All right, let's come back. So let's go to next week and apply. Here we go. So on Tuesday, we have the interest rate decision. My interest really is US dollar news because that will be the main driving force. Now, this next week on Wednesday, we have something important here. We have the FOMC minutes. So the FOMC, or the Federal Open Market Committee minutes, is the meeting minutes from their discussions about where they see the economy going and their plans to basically bring inflation back down to 2%. That's the phrase that almost every central bank says. This piece of news will cause the market to move for definite. Now, if it moves immediately, you already know that it's controlled, because this is minutes. This is not physical. This is not a physical speech. This is written down minutes. So anybody or any market participant in the market wouldn't be able to take a trade or make any decisions about what they think about the dollar immediately. Now, this is the key to teach you about how market manipulation works. Because this is written, it will take at least 15 minutes for, you know, people like hedge funds to actually read what they've said. They don't get this FOMC minutes earlier or later. They get at the same time. Or at least I hope they get it at the same time. On the front face of things, legally, everybody gets the FOMC minutes at the same time at 7 o'clock. Okay, for us in the UK, 7 o'clock GMT. However, what I would say to you is that if at 7 o'clock the market takes off in the first couple of seconds and there's just crazy reactions going on, all of that movement there is definitely market engineered. Okay, is engineered to basically cause a ruckus, which is what they need. They need volatility in order for them to achieve the goals they have. If the FOMC minutes doesn't react straight away, but after 30 minutes you see a reaction, then you know what type of market participants are taking place, or what are they doing in the market. Okay. On Thursday, we have the GDP, which is expected to be the same. That's another piece of news that can cause the dollar to really go crazy, okay? So this is the annualized for Q4, all right? And on Friday, let's see what else we have. Nothing. So if we go to the next week after that, which we're getting towards the new month of March, let me just go to next month. And I'm going to change it to next month, and I'll go for the first 2 weeks. So I'll end off at Friday the 10th. Okay. So coming into Wednesday, which is the 1st of March. All right, we do have some high impact news for the Australian dollar. Let's look at what we have for the US. So we have the PMI, which is important. Thursday, we have nothing for the dollar. Friday, we have ISM. Okay, next week, what do we get? Nothing on Monday, nothing on Tuesday. So this is the 7th of March. The reason why I'm looking at the news is that the news is going to be the time when whatever the manipulations that they have been doing, and you should be technically ready for it already, this is the timings of when they're going to do those placements. That's all the news is for how you should see the news. So on Wednesday, 8th of March, okay, we have the ADP news. We have the Bank of Canada interest rate decision. And then what else do we have? Friday, we'll probably have the NFPs then. So on Friday, yeah, we have the NFPs. Yeah, we have the NFPs. So NFP news is good enough to cause the price to go very strongly long or short, okay? So it looks like, calculating what we have from next week, probably into the middle of March, we should be looking for the reversals to go for those RTOs or for the longs to get back into those areas of key supply. Then moving forward from that, from the middle, the end, I'll say the middle to the end, that's when we should be in those trades, okay? So that's the map that we should be going for. So I hope you enjoyed this session. Matt, I'm so sorry that your mic is muted. I don't know what's happening. But we'll continue again on Monday with another session, and I'll catch you guys later on. Everybody take care. Have a great day.